Hello traders, welcome to Trading Legion. This is your daily wrap-up video for Thursday, the 7th of January 2016. My name is Reynolds Filippo and I'm the Chief Technical Strategist here at Trading Legion. We just shut the room and a big thank you to everybody who joined again. It was a fantastic session. It was great meeting everybody. We had some nice positive feedback as well. Thanks very much. Coming into the day, I mean, it seems like the world is falling apart again. The Chinese are devaluing the currencies, creating a whole lot of problems. We've seen the European equity indices, the S&P futures, everything is just being in free fall. And we try to put that aside and try to see where we can set up some trade plans and take advantage of all this volatility. Because ideally, as a trader, you want to have a healthy dose of volatility within the market, so you can get follow through in the moves and the trade setups that you're looking at. And we got indeed that. As we came into the room, there was a couple of guys that were like heavily bearish the euro. They put some good points forward, which I respected. I marked up all these bearish patterns that the euro had on the 2-hour chart. You can see here we had a left shoulder, a head, right shoulder, and a smaller pattern, which was validated. But what I was saying to the guys in the room is that we've had this uptrend, okay, and we needed to afford some respect to this uptrend that was formed in the euro off the 539 low, and we drew in this channel, and you can see that it could be viewed as a bullish flag. I could see all the bearish patterns, but at the time I said, we're basing at typical end of correction targets. So we took we projected a fib from the low to the high here, and it was a 61.8. But it also, we measured the distance of this decline projected from here, and you can see it's the equidistance somewhere here. So we had a coincidence of Fibonacci support, and we were forming a base. As you can see, we had a short-term double bottom. Actually, let me just quickly go down to the 30-minute chart. You can see right here we had this double bottom here, and at the time coming in, I said to the guys, a nice retest back here, and if we see price being supported here, it's a nice retest, and it's good for a long trade, especially since the DAX is falling, and typically for the past year they've been moving inversely. If the DAX was moving up, the euro is moving down, and vice versa. And we decoupled for a couple of days, but it looked today that it got back into sync. Now, I'm not saying that the euro is a reverse course and we're going to be heading much more higher, but for today's trade plan, I said let's see what price does if we get a retest back here, okay? And that's what exactly we got. But I said to them, why not use this analysis on the euro and try to find a different pair, a different euro pair that is a higher probability outcome. Now, as you know, from if you've watched the previous videos, we've been short the Aussie dollar for a few days now, and that trade is working fantastically. So I said, well, if we're expecting the euro to show some strength based on the inverse correlation with the DAX, then and the Aussie is falling, maybe a logical pair to be looking at is the euro AUD instead of trading the euro directly. So we jumped over to the Euro AUD, and pre-London, this is the 5-minute chart of the Euro AUD, and pre-London we had this pattern emerging. You can see that we came up, but price wasn't making a lot of headway to the upside, and I said, we formed this rising wedge pattern, which is typically a bearish pattern, and I said, and also another big tell was that as price was moving up, okay, we had MACD divergence. MACD wasn't confirming the strength, and I said, based on the pattern, the momentum signature, we could have a pullback. So after that, it was where we'd be looking to get into this trade. So I took a Fibonacci from the low to the high here, and I identified this area around 280, 275 on the pair as a potential area where we might see a bounce and a continuation to the upside. So you can see it's a 61.8% Fibonacci, but also the mean, okay? And I said, well, let's see what happens. So we broke below the rising wedge. We came back down to this area here, and we started getting, smaller candles. We got a spinning top. Then we had some selling pressure come in, and then we got a bullish engulfing. Now, what I said is, what we could do is we can mark up support off the low here. If it breaks above this support level again and retest successfully, then this is basically a false breakout. So that will be our entry point. So we marked up, we for a long trade around 93, stop loss tucked behind the mean, okay, and then we identified a 61.8% Fibonacci retracement. Normally yields a 121.4, 138.2. So we identified this area, and what we liked about this area is that it coincides with the daily R2 as well, okay, and the daily M4, which is a nice profit zone for this intraday trade. We got the break, continued to the upside. We saw the euro strengthening as the DAX was falling, and we attained our target. So it was quite a routine trade plan. And one other thing that I just wanted to bring in here is the long-term chart of the DAX. I've posted this up. It's in our chart pack as well on our website, and you can see I've been tracking this for years, and I've shown this before in a previous video and a blog post. We're there. We're again here. We're at the lower boundary of the Andrews pitchfork. So it'll be very interesting to see what the DAX does here, and we should just keep a close eye on this. So thank you for watching, and have a great day.